If you haven't been able to make money in the market the past few weeks as the market screams higher, you're worse at trading than like one of those baboons with the big red butts. If that's even a baboon, I'm not sure which monkey that is that looks that way. But seriously, the market just keeps screaming higher. We're making new highs consistently. The data's coming in showing the economy's slowing, which means reason to be a little bit cautious. But at the same time, that means the Fed's going to cut rates hopefully to catch unemployment before things get worse and continue to drive things higher. Hello, my YouTube friends. My name is Adam Kahn, and this is Investing with Adam K. I hope everybody's having a good Thursday. Today is September 11th, a bit of a tragic memory for September 11th. A terrible day yesterday for those who obviously I think we all know that Charlie Kirk got shot and he died, and my heart goes out. Rest in peace for Charlie. Like, seriously, it's just awful for a guy who, you know, fights for freedom of speech, wants to have open discussions. He's very opinionated, I understand that, but he's really just wanting to have discussions with people. And he says all the time, you're welcome to disagree with me. This is what we do, and we have conversations about it. To get shot, it's just awful, and it goes against everything that it's hard to say that he believed in, but really, you're getting so angry about having conversations. That's what gives you the rights to have the freedoms that we all do. Either way, I don't want to get too into it. I want to stick with the markets, but they have just been screaming higher. And as much as I make the joke about the baboon's butt and an inability to trade, honestly, if you've been struggling in these markets, you really have to question the positions you have on and what you're invested in. I understand that not everything is going straight higher, but if you're well diversified and you have a proper portfolio, you should be having success recently. Be careful about all the people on YouTube bragging about it, talking about options or leaps or things that they're promising incredible returns. Because as the market goes higher, most of those things are using leverage. So they're going to be doing really well. It would be like me coming on talking about the trading account that's had great success the past few weeks. But it's not anything that I've done. It's not like I'm some genius. It's just that the markets have been driving higher. So while they went against for a little bit, if you just stuck with it, and which is why I have a set it and forget it account so I don't get over emotional about trades, and you just let things play the course, when the market goes higher, your stocks should go higher. There are defensive things that'll do the opposite and move in a backwards direction. But that's the balance of having all sorts of things. And if you're really struggling with it, look into some ETFs. Consider putting money in VOO or QQQM or things like that, or even SCHD if you want to have some dividends coming in. Now, as always, this is not financial advice. I am not a financial advisor. By all means, you shouldn't be listening to me or anybody else on YouTube for these decisions. You need to do your own research when it comes to making your financial decisions, and you might even want to reach out to a financial advisor. I just see the markets continuing higher. I hope that I provide good entertainment. I hope you guys enjoy the content I provide. And I hope that you find some interesting things and maybe you even get some luck and do well on some trades with it. I mean, I don't know if any of you have bought into United Healthcare, but my God, last I saw it was trading, I think, $355 a share, and it may have even touched 360. And that was the one I was sitting there banging my hands on the table saying it was such a great deal. And I wasn't trying to be a wise ass. And in some ways, I hope it goes back down. But to be fair, the way that it's driven higher of recent, I don't really hope it goes back down anymore because that could indicate some actual real problems. I do think they still have the Department of Justice weighing on them, but I'm guessing somebody knows something. Like typically when markets move the way they move, when a stock like United Healthcare just seems to be taking back off, somebody thinks things are okay and that they're going to get past it and it's not going to be a major deal and they probably won't be put on suspension for 5 years. Now, if that's all true, the stock wasn't so overpriced when it was trading over $500 a share. That's the natural price where I think it should be. I think even where it is today is still a really good price. It's just hard for me to really push it here because it's moved over $100 in the past month or so back to the upside. So I do feel like if you've missed it, maybe there are better things to wait on or be prepared for. Because the next one that I would bang on the table against is going to be one that is having bad news and is out of favor, and it keeps dragging and pushing it lower and making things terrible. Target is still struggling, but I don't know what I think. I mean, I still own it. I'm not looking to do anything different. It pays about a 5% dividend, and I'm content getting it. But I understand that I'm not going to tell you that the markets are wrong. I just still think it's cheap when I look at the PE and the potential for the growth. And I think they're finally making changes with the new CEO, and the markets just didn't love that he's been enmeshed in the company for such a long time. So maybe he doesn't have a new direction. Thing is, I think they're a company, like, I don't think that Target's going out of business. I could be wrong, but that's another one I think is a good deal right now. And I will tell you, I have really enjoyed trading options on companies like Conagra and Verizon, which I started doing as well. And I even started with Moderna. Part of the reasons is they don't move a whole lot. Now, Moderna might, but I liked that it was on the bottom. Healthcare in general has been out of favor for a while. It's trading near the lows. So I just kind of randomly looked at it. I haven't dug deep into it, but when I saw where it was trading, I just kind of thought, what's going on with Moderna that they're getting so beat up on? Now, if you guys know what's going on, by all means, put it in the comment section because I should be more aware as to what the problems are. But I saw how far it had fallen, and I just don't know anything wrong with it. And they have a decent name. I know that they're not really doing a ton of COVID vaccines the way they were during the pandemic, and maybe that's their only outlet for profits, and that's the problem. But maybe that's all worked its way through and it's just a little too cheap. But what I've liked about these companies is I've put on really small positions. And then I've been selling puts as well as calls on the positions. And when I do the math of if I'm able to do that week in and week out, even if I'm only getting 15 cents a month on an option on Conagra, that's a 9% return on a company like Conagra. You add to it that it gives a 7% dividend. If I'm long the stock and I don't end up selling the stock because I get taken on a call, you add the 7 and the 9 together, that's a 16% return on a company like Conagra that really doesn't do much, which it thrills me if I can get that type of return. If I actually get taken on the calls and make $1, if I annualize that, considering I'm only selling like 2 week out options, man, that's like a $2,600 a year return on a stock that's trading under $2,000 or under $20 a share. I'm multiplying it times 100 because each option is 100 shares. So if I keep the position rather small, that's incredible returns percentage wise on something that just isn't moving a whole lot, and doesn't scare me when it falls to the downside because it's the same thing. It's not moving so quickly that it's out of control or super volatile like other stocks. It goes to like that, you need to do your own research because that fits in line of comfort levels. I'm finding, like, as this is always growing and changing and fitting what fits you. I'm finding that I am comfortable with the stocks that aren't so volatile. If I want to trade a MicroStrategies, for example, it moves around so much, and I'm more emotional than I'm sure I sound on the videos, that the ups and downs impact me. I might sell at the low, I might buy at the highs, and I get overexcited and over nervous at the wrong times. If I stick with slow, boring companies that really don't move a lot and do the math of what a few bucks here and there add up to, those returns get really exciting to me, and I really like what's been going on in terms of what I've been doing with the options on these companies. So again, the three that I started doing it with are Conagra, Verizon, and I just started with Moderna as well. Now, I know that I told you guys, and I still have it, that I have HIMS as well as SoFi in the trading account. Those are both a little more volatile, which I like getting the higher premiums in the options. And thanks to you guys not being sarcastic, you've helped me be really patient on it. I know myself well enough, and that's kind of the point. When HIMS fell from $70 a share to 42, it might have even been $41 a share. Typically, that stuff would get me really nervous. but I dedicated a certain amount to the trade. And the fact that I was doing the videos confirming what I was doing helped me to stay with the trade. And I'm super excited to say that it's back up around, I think I saw $52 a share before I started doing the video, which is right in the center of where all the options are. And a lot of them start to expire next week. I had some that have already expired and I haven't really done a whole lot with it. But next week I have a few that expire, and then every week or month afterwards, more and more. So it's really exciting seeing the values of those options really start to collapse as the time decay kicks in. So the money that I collected is staying in the account. I still have the trade on. I'll be able to sell a few more calls and maybe some more puts as well. It does have me question what I want to do because I don't know if I really want to be short that many puts, but it's working out good. The premiums are well worth it. I just am staying patient. If you want to pay attention to the trades, I'm sure I will talk about it sometime in a couple of weeks and let you know how it's progressed, because it's kind of neat seeing how it happens. And if I get assigned shares, if I get shares taken away, then we'll deal with it from there. Now, if you're kind of curious about what I'm talking about with Conagra, without me digging into the position and looking at the trade, I will tell you for the most part what I've been looking at. Conagra has been trading between $19 and $20, and it'll drop down to like 18.70 or something. I've seen it drop down to in the past month or so. It's been drifting lower for a long time, and it seems to have bottomed out around here, in my personal opinion. Well, when I've looked, I'm able to sell like a 19 put and potentially like an 18 and a half put for a week or 2 weeks out and get somewhere around 15 cents or 20 cents to be able to sell those options. So if I'm long 200 or possibly 300 shares and keep a small position, I can sell those puts, collect a little bit of money for selling those puts, and then I was able to sell a 20 call as well as a 21 call. And on each of those, I got also more than 20 cents. And I've only been doing it on like 1 week and 2 week options, which is why I point out if you multiply it out over the year and you're able to do that consistently, that's really incredible return. And I think I'm going to be able to generate well over 20% returns by trading Conagra a bit. Now, I'm not putting on a huge position. I don't want to get stuck with 2,000 shares and scare myself out of it or whatever it is. So you have to know your comfort levels if you wanted to look at something at it to know what you'd be comfortable owning or not owning. Now, it doesn't move very far, but it can have a day where it moves up more than I expect or moves down more than I expect. And if I get taken on the calls, if the stock rallies higher, then I can get more aggressive on the puts that I sell. It's kind of what people talk about with the wheel strategy, but it's a way to do it with a stock that really isn't very volatile. You're not going to hit it out of the ballpark. I don't see people getting 80% return in a year like some people promise, the nutballs that they are, or whatever they're promising about make $30,000 a month. But you might get comfortable with the strategy and be able to push your returns a little bit higher than just owning a stock and sitting on it. By selling the calls, especially as you're getting short dated, you're picking up what's called theta or time decay. And as it gets closer to expiration, that time decay generally increases. Meaning, if you're doing an option that's 6 months out, on a daily basis, you don't lose a lot of time decay because you still have a good amount of time until that option expires. As time gets closer to the expiration date, the value in terms of time decay comes out of the value of the option at a faster pace because now you're getting closer to the expiration date much faster as a percentage basis. I hope that makes sense. I know it's all a little confusing. And when you're trading options, it's comprised of many different things. It's not the same as a stock. You have the delta, which is the percentage that the option is going to move in relation to the underlying stock. So if you're looking at a 50 delta option, that means as the stock moves $1, the option should move a half a dollar. What becomes tricky about it is as the stock moves, the delta is going to change as well. You then have Vega, which, if you remember, it starts with a V, which is the volatility index. The lower the volatility, the less of a premium that the options are going to have, but that's because the stock doesn't move around a lot, and it may be okay, which is what I'm actually finding with Conagra and Verizon. I mean, Verizon really surprises me because talk about another one that's a pretty boring stock that doesn't move a whole lot, that I'm really comfortable if I have a couple hundred shares and can sell a put or two to get an extra $20 a week on each of the options, and then maybe sell the call to get an extra 15. I know it's not a lot of dollars, but if you sit down and play with the math a little bit on these options and the stocks and the underlying, and then annualize it, you might be surprised what the percentage yield is over a full year. And if you're comfortable with stocks that don't bounce around a whole lot, it might work with things like that. I noticed in the past it even worked with Altria. Like some of the really boring, it might work with Procter and Gamble or Coke or Pepsi or any company that you're comfortable with. And if you're comfortable with the moves and they don't go too far and you aren't worried about getting stuck with 100 shares if it goes through your put levels or 200 if you do too, it might work really well to stick with the companies that fit your personality. Now, if you like the stuff that just flies around and you want to do it with a Duolingo or something that's really volatile or something like a Spotify that moves around or MicroStrategies because that's your personality, great. But I'm old and slow and boring, and I'm noticing that these slow and boring stocks are working out okay. The other thing that I kind of like about a Conagra or a Verizon is I feel like if they start to continue to drift lower, I'll have the opportunity to sell calls as I get assigned the shares to offset the loss that the stock is going to have in the share price. So I'll explain that a little bit better. So let's say I think Conagra was $19.25. It's not, I think it's a little higher, but let's call it right in the middle of the strike. If I sell a 19 put and I'm long 200 shares and I've sold a 19 and a half call, and the stock starts to trend lower and it gets below 19 and I get assigned 100 shares at 19, I think it will move slow enough that I will have the opportunity to sell a 19 call now off of the new shares that I've been assigned, to where even if the stock continues to trend lower, I'll collect enough on selling that call to offset how much I'm losing on the stock if it continues to trend lower. And if I get another 100 shares assigned to me at 18 and a half or 18, I will still have the time and the opportunity to sell calls against it, continuing to offset the amount that I'm losing on the stock by owning the stock with the calls that I'm selling, as well as collecting the premiums on the put. Did that make sense? If not, comment in the comment section. I'll write it down. I'll do a better job of explaining it so people get it. But let me know what you think. Do you think it would be more fun to trade some boring, slow moving stocks, or do you like the real volatile ones? Now, the one thing I'd want to caution everybody about is the reason that the Fed is finally cutting rates is the economy is slowing down according to the data. So I would be a little sensitive to either margins are going to get tighter or things are slowing down, so earnings may not be as robust as people hope. The Fed cutting rates to stimulate the economy when things are slowing may not quite stimulate it the way people think it will. You might see earnings kind of lag a bit, and maybe the stock market slows. But what I'm actually hoping is a little bit different of a scenario, because what I find tends to happen is markets go a lot further than people think they will, and they don't always make sense. Now, that doesn't mean they're manipulated. Markets are very emotional and they react to volume and buying and selling and supply and demand like everything else. There is still a lot of cash on the sideline. So if the economy slows down and people are having trouble finding ways to make money, and the stock market continues to go higher, as people talk about it, other people are going to continue to jump in, even as the valuations get worse and worse and worse. So I wouldn't be shocked to see what people refer to as a melt up, which is what I keep saying I'm kind of waiting for. Now, I am not promising that's what's going to happen, but what I do see beginning to happen is people getting excited that the Fed's cutting rates, the market slowing down, and I don't mean the stock market, I mean the economy. I apologize for calling it a market, but the economy slowing down, which could end up causing rates to, or extending price to earnings levels and things like that. Forgive me, I'm getting a phone call. Forgive me about the call, which kind of distracted me. Anyway, my hope, if that's not necessarily correct, but what I am waiting to see in terms of how things play out is, do we see the economy slow down as the stock market continues to accelerate higher? And then the price to earnings and everything else will really become disconnected to reality. And you could still see people piling in because they'll get excited about the market going up and that they're making money in it. That's what can really drive things out of whack and cause what Greenspan called irrational exuberance and not paying attention to actual valuations versus what's going on. So if the economy is slowing and the Fed's cutting rates because the economy is slowing and earnings are dropping and stock prices continue higher, exacerbating where the valuations are, I think we could see a melt up. There's enough cash on the sideline to continue to push in and drive the prices higher, so I'd keep an eye and I'd be a little cautious and pay attention to what's going on in terms of the earnings and the revenues and how the companies are doing as we move forward. I still think the market looks bullish. It looks like it's continuing higher. And like I said, it's almost what I hope for because it'll create an opportunity for a really good trade. I don't hope for it because it's really bad for people overall because booms and busts are just not a great thing. But I also see that it could be coming, and this could be the beginning of a bubble, and that could be what we see. Anyway, the call took a while. I don't mean to cut it short. Rest in peace, Charlie Kirk. I hope everybody's doing well. If you haven't already, do me a favor and hit that subscribe button, smash the like button, and make some comments in the comment section. Have a great day.